first of all, I have to thank all the local Japanese media for leaking out all the moves ahead of time. So, as you can see from the reaction of the markets, it wasn't a huge change in terms of reaction, I guess. But what this basically means is that, as you just pointed out, the last era of negative rates, and now we're turning to something more normal. Try to explain to anyone out there, what the heck does negative rates mean? And Japan's have had this for so many years now. So now they're finally back to normal, peaking above. We're back in positive territory, although at 0 to 0.1% range, it's still extremely accommodative. But again, it shows that the Bank of Japan is no longer asleep at the wheel and is finally moving toward a more normal condition.
And Jennifer, I'm looking at some of the market reaction from analysts and strategists, basically saying that the forward guidance doesn't close the door on another hike. Is that something that you agree with? What's your read on what could be next?
So I did see, some people penciling, a series of rate hikes. I think it's, way too soon. I mean, this bank is very deliberate and very, careful of what their moves are. Obviously, we've had inflation well above the 2% target for, over 2 years now, and now they're finally moving. But, I think it's way too early to say that this is the beginning of a series of rate hikes. I wouldn't be shocked if we see one more move, but, as you just pointed out, like the statements still said that they're going to be very accommodative for some time. They're still buying JGBs. They're going to buy more if you see some sort of a big abrupt move in the JGB market, which we're not seeing this morning. So it all depends, but they're still out there. They're still keeping rates very, very low. Again, not negative, but at least it's, that's still very close to zero. So still very accommodative. I think it's too soon to say that there will be a series of rate hikes, but I wouldn't be surprised if they kind of nudged it up a little bit further, depending on obviously how things play out. Everything is data dependent and not calendar dependent, to use all the famous words that various central bankers use these days.
Yep, busy week here for central bankers, to be sure, not just at the Bank of Japan, but tomorrow with the United States Federal Reserve. What do you think we're going to hear from Fed Chairman Jay Powell? I mean, obviously most people don't expect any movement in rates tomorrow, but what kind of commentary do you think we'll hear?
He's going to stay uber cautious, I think, especially after what we saw the last week with the sticky inflation numbers, both for CPI and PPI, and the still, in my opinion, a little bit questionable retail sales data shows that, we're again, we have still to be very cautious with what we say. I just have to say briefly about retail sales. I was kind of disappointed to see that I'm going to say crappy, January retail sales results, even lowered, even crappier, even though we did see the bounce back in February. So it's sort of interesting to see how that's going to play out. But definitely sticky inflation is what they're going to be worried about. And the Fed chair is going to be extremely, extremely cautious in what he says. He doesn't want to, cause any undue, hoopla, I guess, in markets to say, to cause everyone to speculate that they're going to be cutting earlier or whatever. But I think he's probably going to push back again on expectations of when the Fed will finally cut rates. We're sticking to our July call. I think it'd be very interesting to see what the dot plot does, whether or not they're going to stick with those 3 cuts I think that they have penciled in for this year.
Yeah, Jennifer, looking at the warp function, WIRP on the terminal, the first full cut fully priced in July, to your point, with potentially 3, yes, at least according to our data, through the end of the year, early 2025. What can Jay Powell say from a hawkish perspective that could make investors reshape expectations?
He could talk about being very worried, or he won't say very, but he'll say that, we're still concerned about how inflation is still sticky, services inflation, the super core measure and all that. Again, just sounding a little bit more concerned, I think would cause markets to push back the timing, I think, a little bit more. But again, he's been saying this, for some time now, and I think he's just going to stick to that script. And any sort of swaying away from his usual wording I think will cause markets to pounce as well. So he has to be so careful of what he says, how many times he says, how many times he blinks, everyone will be focusing on every little nuance that he does, anything that's different from what he has been, doing in the past few months.
We have BOJ, Fed, and BOE, but there's this company called Nvidia having their GTC conference. I talk to investors. They're more focused on Nvidia than anything related to central banks. Is that concerning?
Well, it's definitely more interesting. I personally wish I owned it, but I think, but of course, everything is going to, we're all going to be hinging on not only the earnings and all that, but of course, monetary policy is going to be, how it's going to be playing out over the next year, how much easier it's going to be, or less easy, or less tight it's going to be. I think it's all going to go back to what the Fed chair is going to say or not say, and how they're going to act for the rest of the year.